I grew this trade to 5R using market structure, supply and demand, and pure price action analysis. And in this video, I'm going to break it down step by step so we can understand the repeatable framework behind it. But more importantly, I'll show you what I learned that I didn't fully understand before. It wasn't just the setup that made this trade work, it was the alignment between higher time frame structure, internal order flow, and waiting for price to truly confirm supply before entering the short. That layer of patience and structure alignment changed the quality of the trade. My name is Vi. I've been trading for a few years, and I'm still on the journey towards consistent profitability. My focus is mastering market structure, supply and demand, and price action to build real skills and eventually real financial freedom for me and my family. If you're on the same path, then stick around. Let's sharpen our edge together. As a reminder, this is for educational purposes only and not financial advice. With that said, let's jump into the chart. All right, so we are on USD CAD. We're backtesting here, Wednesday, May 7th of 2025. This is the 5R trade we're looking at. So what we're going to do is we're going to remove this notion here just so that we have a clean chart to start from. And we're going to drop down to the 15-minute. So as we can see on the 15-minute, we are presently in a bearish order flow, right? Our trade zone spans from this high here down to this low. And we care about price action inside of this box. Now, if we look closer into our time of interest, and I'm going to rewind the clock to just before 9:30 open here on the East Coast, we can see a couple of things. So we've made our low and we've been pulling back. And during London session, we can see that a high was created, but it failed to take its low. So it grabbed internal liquidity, but did not head to the next point of internal liquidity on the sell side. This tells us that this high is weak. And so as a result, we aren't surprised when this high was taken by the New York morning hour early session trading. What we also see is a supply zone created right here that was created back the day before. And this is important because we can see that this created a massive sell down with displacement as noted by the fair value gap, and eventually even helped create break below this low, this previous low. So this is where the orders initiated. You can argue that there's a little supply zone here too, but since this is our most immediate zone, this is the one we want to focus on. And so what we're going to do is we're going to draw this box out to the left. And I'm actually going to adjust it to capture London high as well, since this represents now the space where all remaining sell orders could be that initiated this move down. So with that said, we can see that we're tagged in as of early morning New York hours. And so as soon as we want to drop down to the 1 minute, because now we know that this weak high has been taken. It also represents London high where there's and so I'm going to rewind back just before we kind of enter that supply zone, representing around 8:45. And it doesn't look like we have any news here, so that's good for us as well. Okay, so we are a little bit past 8:45 here, and we've entered the zone. At this point, we can zoom in. We can see that we do have a demand zone that helped take this local high here and created a fair value gap. So I would target this low to be broken at this point now that we've entered the zone. So I'll do that by just marking off a line here for ourselves, and we're going to just observe price action. It's interesting enough now, anytime we see a fair value gap created, we want to see if a demand zone is now associated with that. In this case, we see that it is. We see that price moved down and then shot back up and took this internal high here. And so for me, that qualifies as a new demand zone. If this candle did not have a space in between it and it just went up, down, up, I probably wouldn't take that, since this doesn't represent that representation of buyers coming in and pushing price up. And so we want to move our mark of interest higher. We let price play out. A huge aggressive sell candle comes in, so that's the first sign, but we don't do anything until we have this, we cross over this line. Play out, demand steps in, which is expected. a little bit of activity, a little fight between everybody at this point. Buyers step in again once sellers try to take that line, as you can see by the rejection wick here. It tells us that sellers pushed all the way down, but then buyers pushed them back up. We'll continue forward, and there's our break. This finally sellers overtake, and this is the signal to us that sellers have come into the market and are taking over. And so we want to now find an area to enter the trade. So I like to go to the 5 minute, it's a little bit cleaner, and we can see here that there is this last buy to sell candle with a nice rejection wick to it. I'll place my stops right above it and line up my entry just about to the bottom of the body. And I'm going to now target this low. The theory being that we have entered, hit this, taken this high, and now we're going to the next area of internal liquidity, which is down here. Now, on the way, there are many other internal points of liquidity beyond that could be areas of taking profit. There's one fair value gap right here, and these all represent areas where buyers could exist and cause price to fluctuate. We could see price bounce around here and potentially shoot back up, and we don't want to leave any profits on the table if this happens. Here's another area where that could happen, where you have an accumulation of orders that could result in some back and forth between sellers and buyers. And so we'll mark that up as another point of interest to take profits from. And then we'll finally leave this area as a potential take profit area too, this mark here. And since we're looking for that 5R, what we're going to do is just adjust our entry to just a little bit before, 4.94 right there, just about good enough. And so now that we have our entry placed in a spot that makes sense, our stop is at a place that makes sense, and we have multiple PTs, including a final PT that makes sense, we're ready to enter the trade. And so that's what we'll do with this backtest exercise. We'll place it on for 1%, and we'll let price play out here on the 5 minute chart. So price essentially moves away from us, and then we're tagged in immediately. Price comes back aggressively to the stop loss. But again, our theory is that this is a protected high because it took this liquidity and now it has grabbed enough sellers to take price down. And so right now we just hold. This isn't a fun part of it, but we hold. But again, look at that seller candle that just came in, bearish candle that essentially almost engulfs the previous candle. That tells me a lot of sellers are coming in. And at that point, we never really look back. We are approaching our first PT, which is taken. So we'll immediately move our stops to break even and take 50% of our trade off the table. And we'll keep price eventually continues going down. This is now as of the open. We're just before the open, actually. We're not even there yet. And frankly, I would have been at break even on all my trades at break even at this point because the open could wash us out. We're going to take another percentage off the table here. And then finally, again, before 9:30 open, we see a little bit of activity. We expect this because we have now entered an area of demand that is represented by the fair value gap. And so price is pushing back on us. We can choose to bring our stops lower or leave as is. This is a personal preference. I personally like to see what price will do, and then eventually 9:30 open passes us and we go for our full TP. So that is how we eventually manage this trade. Now, I understand this isn't a complete 5R since we were taking profits along the way, but that's up to you. You can leave, you can choose not to take profits and let the profit accumulate and then collect a full 5R, or you can take it along the way, which is what I prefer to do. It helps me with my mental confidence as I'm trading to see profits continue to come in. So that is the trade. I hope that helped you understand how potentially to use order flow, supply and demand, and price action analysis to validate trade options for you. If you found that helpful, then check out this video right here as your next stop, and I'll see you there.